Stock market performance and investment strategies, US versus Europe. Stock market performance in the US, market indices, major indices. The US is home to some of the most influential stock indices, such as the S&P 500, Dow Jones Industrial Average, and NASDAQ. These indices are often considered benchmarks for market performance. Growth. Historically, the US stock market has shown strong growth, driven by leading technology and consumer companies. Investment strategies. Growth investing. The US market is known for its emphasis on growth investing, particularly in technology and innovation sectors. Index funds and ETFs. US investors often use index funds and ETFs to gain exposure to a broad range of sectors and companies, benefiting from the overall market performance. Market trends. Tech dominance. Technology stocks, particularly those of big tech companies, play a significant role in the performance of US stock markets. Volatility. The US market can be highly volatile, influenced by economic policies, interest rates, and global events. Stock market performance in Europe. Market indices. Major indices. Key European indices include the FTSE 100, UK, DAX, Germany, CAC 40, France, and Eurostoxx 50. These indices represent the performance of major European companies. Growth. European markets have historically grown at a slower pace compared to the US, with a stronger focus on industries like manufacturing, finance, and utilities. Investment strategies. Value investing. European markets often emphasize value investing, focusing on companies with strong fundamentals and stable dividends. Sector exposure. European investors may concentrate on sectors such as energy, pharmaceuticals, and financial services, which are prominent in the region. Market trends. Sector variation. The performance of European stock markets can be influenced by sector-specific trends and regional economic conditions. Regulatory environment. European markets are subject to different regulatory frameworks compared to the US, which can affect investment strategies and market performance. Comparative insights. Market performance. The US stock market has shown higher growth rates compared to Europe, driven by a strong technology sector and innovation. European markets may offer stability, but often exhibit slower growth. Investment strategies. While the US often favors growth investing with a focus on technology, European investors may lean towards value investing and traditional sectors. Market trends and volatility. US markets are known for their high volatility and tech dominance, whereas European markets may be more influenced by regional economic conditions and sector-specific trends. The landscape of financial technology, FinTech, is witnessing a rapid evolution, marked by substantial differences and similarities between two major regions, the United States and Europe. Both regions are recognized as global leaders in FinTech innovation, but have distinct market dynamics, regulatory environments, and investment trends that shape their respective ecosystems. In the US, cities like San Francisco, New York, and Boston form the crux of FinTech innovation. These tech hubs benefit from a high concentration of venture capital, a rich pool of tech talent, and an entrenched culture of entrepreneurship. This fosters the development of cutting-edge solutions such as blockchain technology, AI-driven financial services, and digital banking products. The American market shows strong consumer adoption of FinTech solutions, driven by a high level of technological integration in daily life. Citizens rapidly embrace digital payment systems, mobile banking apps, and robo-advisors. However, the US regulatory environment is notably complex, with multiple federal and state agencies overseeing financial services. This complexity can present both opportunities and challenges for FinTech enterprises, depending on their ability to navigate the landscape. Investment trends highlight the significant venture capital inflow the US enjoys, which fuels the growth of startups and innovation in domains such as payment processing, peer-to-peer lending, and investment platforms. Across the Atlantic, Europe boasts major FinTech hubs like London, Berlin, and Amsterdam. Europe is particularly noted for advancements in regulatory technology, RegTech, and cross-border payment solutions. The continent benefits from a more unified regulatory framework, largely due to the EU's Payment Services Directive 2, PSD2, which encourages competition and innovation within payment services. The European market also exhibits robust consumer adoption of digital payments and mobile banking, though the rate of adoption varies significantly between countries. Europe's focus on security and privacy has spurred innovations in these areas, influenced by regulations such as the General Data Protection Regulation, GDPR. Investment trends in Europe tend to emphasize financial inclusion, sustainable finance, and cross-border payment solutions. The EU supports digital innovation through various funding and initiatives, aiding FinTech companies in scaling and advancing. Comparative insights reveal that while both the US and Europe are leaders in FinTech innovation, their focus areas often differ. The US is typically ahead in consumer-driven innovations and cutting-edge technologies, whereas Europe prioritizes regulatory compliance and cross-border solutions. The regulatory landscape in the US is fragmented, posing a challenge for companies aiming for national scale, unlike Europe's standardized regulatory environment across member states, which facilitates easier market entry and expansion. Consumer adoption of FinTech solutions is high in both regions, though the specific technologies and services that gain traction are influenced by regional preferences and regulatory contexts. The US benefits from a higher level of venture capital investment in FinTech, while Europe thrives on a combination of private and public sector support geared toward innovation and regulatory advancements. Real estate investment is a multifaceted domain, presenting distinct opportunities and challenges in the US and Europe. Understanding the nuances of each market is crucial for investors aiming to maximize returns and minimize risks. Let's delve into the key differences between real estate investment in these two regions. In the US, the real estate market is known for its diversity. From the high-growth urban centers like New York and San Francisco to the emerging markets in the Midwest and South, investors can find a wide array of opportunities. The regulatory environment varies by state but generally offers favorable conditions for investors. The property acquisition process is relatively straightforward, supported by well-established legal frameworks. Current market trends, such as the rise of remote work, are shaping residential and commercial real estate. Suburban and exurban areas are becoming attractive as people seek more space. Financing for real estate investments is accessible, with options like conventional mortgages, private equity, and real estate investment trusts, REITs. However, property taxes, which vary widely by state, can impact returns and should be considered when evaluating properties. Europe's real estate market offers diversity across different countries. Major cities like London, Paris, and Berlin provide robust investment opportunities, while emerging markets in Eastern Europe present higher growth potential. However, the regulatory environment in Europe can be complex and varies significantly by country. Some nations have stringent property laws and high transaction costs, which can influence investment decisions. European market trends emphasize sustainability and energy efficiency, with opportunities in green buildings and properties with low carbon footprints. Financing options, including traditional mortgages, investment funds, and REITs, are available, but access can be more complex due to varying regulations. Additionally, property taxes and transaction costs in some European countries can be high, affecting the overall return on investment. When comparing real estate investment opportunities in the US and Europe, several comparative insights emerge. Both regions offer diverse real estate opportunities, but market dynamics and investment potential differ significantly by location and market conditions. Understanding local regulations and tax implications is crucial. The US generally offers a more streamlined process, while Europe can be more complex and variable. Market trends like remote work, sustainability, and urbanization impact real estate markets in both regions. Staying informed about these trends is key to identifying opportunities. Both regions provide various financing options, but costs and access to financing can vary. Evaluating these factors when planning real estate investments is essential for informed decision-making.